It's been great getting some comments from people um, about Pips Wizard Pro and Forex Trendy. People are realizing that swing trading, going for the bigger moves, is a lot less time intensive, and it's awesome for people that work full time jobs or that just don't want to sit in front of a computer and scalp. And I'm not a scalper. Um, Day trading is what I used to do as well. And once your account size gets bigger and you can start putting on a little bit larger position sizing for your swing trades, day trading is you find other things that you can do better with your time with. Um, so I want to let you know how quick it is to just whip through a bunch of charts to see if setups are happening, and then you would just put your little watch list together and wait for signals. Let's just take a look at here's a euro US dollar. You can see that. Remember this line that we talked about? This is a moving average, 50 period exponential. Doesn't matter. You can use a simple. It doesn't matter. And all we're doing is if price is above, we're going to take trades that are blue, which are long trades, and if they're short, if it's below, we're going to take trades to the downside, which are the orange colors. And you can now say to yourself, okay, well, if the moving average is going sideways, more or less sideways, remember, all you can see is this at the time. You can see that. You won't take any trades. So you can do that as well. It just depends what you're into. So you can see here on the Euro US dollar, you would just put that chart on. Pips Wizard Pro would go on it. And you'll see we have a long setup on the close of this candle right here. Okay? What do? Well, you can set an order to buy when we break the highs. You can do that. There's different ways that you can enter your trades. Okay. So that's how quickly you can come in, look at this market, say, okay, look, price is below. So I would only look for shorts. We would not take this short. We actually just got out of a long trade, which depending on how you manage it, you could say that when price closes outside of the moving average, you will get out. Okay. And that trade would have given you, let's start here, buy the high. This trade would have given you, this is a close, 1,056 pips. And this trade would have triggered back in on April. So all month, almost half the year, you're just sitting through this. And that's it. That's all you're doing. Maybe you're tightening your stops just below the 50. Maybe obviously you want to give yourself some leeway. But this trade here is it's over 1,000 pips. Man, you just did one trade. And yes, you do get a little bit beat up over here. Let's take a quick little look. Let's just go from the beginning of the year. We'll start here in December. This is a long trade. You don't take it because price is not above. This is a short trade. You don't take it because price is not below. This short trade here, let me just zoom in a little bit, just so you know we're not trying to steer you straight. Actually, this one closes below. You would take this trade here, and you would get out when price closes above. Now, you're going to have to decide whether this constitutes a close above or not for you. But let's just say this. Let's take a loss here to make it nice and simple. Okay, you take a loss for 50 odd pips there, and then this is the setup here. Price closes above. There's the setup, and you just take this trade long. And right now on this candlestick here, it's a trade to the upside. You would put your buy stop. You could buy stop order. It depends on what your brokers will call these different names. Where I trade for swing trading, my spot market, they're called buy stop orders. We'll go right here above, and this is a high. Just zoom in here. Yeah, if you just put it above, you're not in this trade yet, but this is a nice looking candle, right? So you haven't triggered in yet unless you get in the close, and if you get in the close, you took a little bit of heat. That's fine, right? That's what happens. And depending on your stop, maybe you put your stop below here, which is 142 pips. And if you think, oh, that's a big stop, well, you're talking about swing trading on the daily charts. Or you can just use an ATR stop. So anyways, the Euro US dollar has an up trade setting up. Let's look at the US dollar Japanese yen. It's kind of sloppy looking chart, isn't it? this is your trade goes here, and you're still in this trade, and it did rise for about 300 pips. Because this is the diamond. Just line the diamond up, and this is the close above, so we could take that up above the high. This trade goes up for almost 300 pips, and we're pulling back down. So you might be pulling back quite a bit. And again, it depends how you manage your trades. If you're not managing your trades, then you don't want to let a really nice winning trade give back too much. If you get down here and you've given back 200 pips, that's a little bit excessive. So start managing your trades, especially in this kind of market. And then you can do anything. You could say to yourself, okay, if price starts to break a downward trend line, an upwards trend line here, I will tighten my stop. Just something to keep it as objective as you can. And we're back. This is July. You don't take this short because it's not setting up below. You would take this short here, and we would get out here if you want, 69 pip loss. So a bit of a loss here on this. Doesn't matter. You come back in 300 pips, right? So don't think that you're not going to take losses. You will. It's just how you manage your losses, number one, and making sure you take the trades that they set up. This is the New Zealand dollar, Japanese yen. This long trade actually works out, but you're not in it. And again, if you just look at the price action, this is not conducive to like the euro was a great market. This is the New Zealand dollar, Japanese yen, right? It's not one of the major crosses. And you would not be in any trade here right now. You wouldn't have been in this long. You wouldn't have been in this short. You would not have been in this short. You would have been in this long, which is right here. And this goes up high is 527 pips. Pulls back 281. Look, that's a big drop. So if you're waiting that long, I want to be careful. All right. Understand that if you're in an uptrend, what is the uptrending pattern? Higher highs and higher lows, right? If price starts defeating that on an uptrend, for example, you might want to start tightening your stop up so you're not losing out too much. Okay, so you would look at here's a high, there's a higher high, sorry, a low, a higher high, right? So what do we need? We need a lower low. A higher low, and we don't get it. And it breaks here. As soon as we do that, if we take out this low, right, what does that mean? It means we could be looking at losing our trade, right, because our uptrend is in jeopardy. You could just stick your stop underneath here if you like. And also, see this is a 50-period moving average. So when price starts racing away like this is when you want to be on alert for these kind of, let me just make sure let me look at the right one here. When price starts pulling away, remember markets mean revert, right? So you want to make sure that when price starts pulling away like this, that you're not looking at a capitulation. You can see it's pulling up here, and you can see it's pulling right into this area right here, which is an area that was acting as resistance. Could act as resistance again, and it does. All right, so that's just technical analysis. I can always cover that kind of stuff in other videos if you people want to see that. Let's look at the pound US. Pound US, you didn't get this short trade, which would have paid off 500 pips roughly. But now we are into a long trade. Right away you get some heat, but now it's up. What is that, 81? I have my glasses on. 90 pips. This trade here, where's the close on this? Yeah, it's one of those things where you're looking at it and go, well, I don't know if it's closed above or not. So what can we do? We can just bring up our little display window here, and we can look at what is the value of the moving average is 1.2939. What is the high of the other candle? 1.2942. Okay? And you can see that the close, 1.2939, is pretty much right on the moving average. Okay? So that's where you have to make your own choices again. How close it has to be. All right? But if you did get in this trade, it rallied up for 700 pips, 720 pips. And again, look at this capitulation. When you see this kind of topping action, especially this big thrusting red candle, and then it slams back, be on alert, because that is the market telling you something, and you just drop up to the higher frame. You can see it. Look, you got these choppy moves, right? Big break. Price starts to pull back. All right. You got to read this stuff. You have to. You can see that price has pulled back, has dropped far away from the 50-period moving average here. Capitulation, pulls back up, right? So be on alert for that. And I've always said from day one, you don't trade these things blind. This is a buy setup that was just showing up, which is right here. And this is a valid setup, right? It's above the high. You haven't triggered in yet, okay? But trading it as objectively as you can. You would not have been in this long trade, okay? That happens. That happens. I'm going to look at multiple time frames as well with Pips Wizard Pro, not in this video here. Because with Infinity Scalper, if you're scalping, you can use the 5-minute trend on the 1-minute chart and only take the trades that set up in the direction of the 5-minute. All right, just so you know. So this trade is still pending, but you didn't really get anything. I'm trying to find where we can get a setup. Here's a setup short on the pound. When this blue shows up, that might want to use that for an exit. I've covered that before. So this trade would have given you 200 and change pip wise from 400. But again, you got to another setup. Well, it's Infinity Scalper. I've got that open on the same page. I just set up a trade. Anyways, you can see here what's going on. Euro, Japanese yen. You know, the euro, it is what it is. You know, we get a little sloppy mess right here. You don't get this short trade, but you get this long trade. So, if you are seeing this happen, this kind of stuff here, what is our strategy? We do not take trades unless they're below our green line here, right? So this trade you would have got in. You wouldn't have got in here, okay? So you'd have to wait. Oh, here's our setup right here. This setup happens back in June. Take the high. You get out here on the close. It's 372 pips. And then slaps around a little bit. We get another setup here. By the high. The highs went as high as 500. Let's come back down to 200. Back up. Again, these momentum candles against your position. You're getting the sign that we got a problem. And you can see it right in there. These candlesticks here are telling you a story. And you can see, you know, people are going to write in, oh, yeah, it's hindsight. You know, obviously it is. I got to show you trades that have played out. Right? These take months to play out on this chart. But you can see they're here. So it doesn't matter if it's hindsight. They're here. And you can see the alerts that pop up. There's no reason you cannot take advantage. So the point of all this was that you can come in during the day. This is a upside trade, which is right there, but you don't get it because we're below the line. You get this trade here to the downside, which fell for about 190 pips. And where does this trade actually take off from? Are you in it? Yep. You get it in this trade pretty much as the trend starts to the upside. And you're looking at maximum on this trade, 580 pips. Not bad, right? You get out here, 385 pips. You can see these, right? I'm not just, you know, making this stuff up. And I know some traders have bought this stuff and they've complained that it hasn't worked the way they want it to. Well, I don't know what you're doing because you can see clearly here that it works out just fine. It's you. It's not the strategy. Here's your buy. Goes as high as 266. Pulls back around, 13 pips. Again, it's one of those things. Well, it's like a price action. You get this move up. When we are in an uptrend, what do we not want to see? We do not want to see strong moves against, right? Which we see right with this red candle right here. So if you're seeing this stuff, you want to get out. And actually, these usually set up really decent little trades. You get a strong move down. You get some sort of flag formation, right? This one is not as clean as I would have liked to see. I want to see a more of a slow move up. This is kind of strong. But it's actually a way you can trade these moves as well. And again, let's just see what happens on the higher time frame. Do we see anything that's telling us that, well, there you go. You're trading right up into an area that was resistance, acted as resistance again. Okay. Anyways, you could clearly see that these this thing works just fine. Yeah, you're going to take some losses. Every strategy is going to have a loss. Anyone that tells you you're not going to have a loss is lying to you. At the end of the day, it's making sure you are not over trading. It's making sure you're putting in stops. It's making sure you're not knee jerking in and out of trades. You can see it here. Pick up PIPS Wizard Pro. For swing traders, this is a great strategy. It's nice and simple. Slap on the 50-period moving average. Keep it nice and simple for yourself. Only take trades in the direction of the moving average or when the price is in that location. Understand basic price action, right? Higher highs, higher lows, lower high, lower lows for downtrends. And just be smart. All right, thanks for watching. Pick it up. Let me know you got it, and let me know what you think. Thanks a lot.